Welcome back to this next video in the Jeel. In this video, we're going to be looking at specifically the signals. And so you got three different signals that the Jeel is going to provide. And of course, you get more than that, but I'm talking here just about the main ones. And so you get three main signals that you can read from the Jeel. The first one is the picture perfect signal. Second one is the continuation signal. And the third one is the fib signal. So we're going to start with the picture perfect signal. And in order to make these things a little bit clearer and easier to see, I'm going to remove a few things in there. So I'm going to remove this, that, and I'm going to leave the background alerts. I'm going to leave the smoothing to 1, and yes, there we go. So we're going to use a daily chart on Bitcoin, but that applies to every time frame. It's not married to any of the time frame over there, any of the settings, or any of the asset. This is the three signals that I'm going to give you right now can be applied to any asset on any time frame, and we're going to be able to see that after. So the picture perfect signal. On the daily, there is two obvious ones in there. And you're going to get usually those perfect signals right there. You're going to find those perfect signals there at the end of a big trending move. You will not get those signals during a trending market. Okay? So I'm going to show you what I mean by that exactly. So you have your trending market. You have consolidation, trending market, consolidation, and trending market. Okay? So the signals that I'm about to show you, the picture perfect one, you will not find those during the trending market, or very rarely. When you're going to find the signals, usually are going to be at the end of a trending move or during a consolidation. Okay? Now, what are the signals exactly that I'm talking about? I touched upon it a little bit on the previous video, but I'm going to try and make that perfectly clear in there. So, perfect signal. You first have the background alert. Okay. Then you have, after the background alert, you have the blue coming up. Then you have blue coming back down and testing the slower curves and using them as a support. So the very zone that I'm talking about, I'm going to zoom in hard in there, is that one. Another example is that one. Even though we didn't have the background alerts first, this is not, so the background alerts are not mandatory. They are, again, just there to help you saying, watch out, there's a signal coming. The signals in and of themselves are really the blue coming up, back down, and using yellow and purple as supports. Okay? And you can see whenever you get that, which is exactly here, I'm going to actually use vertical lines. It's going to make things easier. That signal over there gives you a fairly decent bounce. Give you about 30% bounce. if we check out that signal over there, well, that one that one gives yeah, a pretty decent move up. You get other ones. So let's see a perfect one there, right over there, exactly same pattern again. So you get background, blue comes up, comes back down, and use yellow and purple as support, and you get this. Move back. Now, of course, the exact same thing happens. And by the way, we got one just a few days ago over there. Right? Now, of course, the exact same rule apply on the opposite side. Just get rid of it first. Whenever you want to go short, and it would be that one. Called you the biggest top of Bitcoin. Right over there. And let's go, since we are on Bitstamp, we can go a bit further down, see if we can spot another perfect signal. Let's see. You get kind of a signal there. Now the thing is, the blue crossed the purple one, so it didn't use it as a support, but it still used the yellow as a support. So it's not a 100% picture perfect, but it's getting there. You had one over there, and let's see if I can spot some other ones. I think you're getting the hang of it by now for that specific signal, but yeah, and we don't have enough data on that side. Okay, but you get the hang of it on that side, right? So what you see, if I take on a daily chart, right, those perfect signal over there, we got 1, 2, 1 on the short side, so 3, and that's pretty much, oh, we got 1 there. That would be 4. So over the course of seven and 760 days, so that's what, about 2.5 years, on the daily chart on Bitcoin, you get 3 perfect signals. So what does that mean is this: don't base everything on those daily perfect signals, but when they do happen, pay attention, is what it means, right? So if I switch on to, as an example, a 3-day chart, you got your exact perfect signal over there. Background alert, blue comes up, comes back down, and used everything as a support, and jumps up, and you get that bounce over there, which is quite a decent bounce again. So if we look at the chart entirely, the last time we got a perfect signal on a 3-day was here. In other words, 12th of June 2015. And the next one we got 2019, February, 4 years apart. So those perfect signals are pretty rare, right? But when they do happen, that's the time to pay attention. Now really is the time. And just as an aside, by the way, once we get the perfect signal on the 3-day there, we never came back down. Almost. But the thing to notice on the Jeel is the yellow curve. If you notice the yellow curve right there, okay, right there and right there. So of course it didn't have the same magnitude, but you can see the pattern, right? So you get your perfect signal, you get the bounce, yellow goes up and yellow comes back to the 618, that horizontal line over there. You get your perfect signal, yellow goes up, comes back, and right now we are sitting on that 618 over there for the yellow. Okay, just something to notice. This is not part of a perfect signal, it's just basically showing you how many things you can read out of the Jeel. And you will see over time that there's quite a few of them, but let's keep it simple for now. So that would be the perfect picture, the picture perfect signal. Now, the next one would be the continuation signal. And so I'm going to switch, I'm going to go to daily. I'm going to switch back to the daily there. And those are what I call the continuation signal. And if you noticed over there, I'm going to highlight the entire zone for you. There you go. I'm going to highlight another zone for you. Yes, that's pretty much it. Okay, so this way you're going to see both on each side, right? So, continuation signal. A continuation signal is when you have basically a trend going up or a trend going down. Your blue fast is going to be doing something like this. Okay, you can see it over there. And along the way, it's using either the purple or the yellow as a support. You can see it bounce from the yellow over there. Same thing on the other side. You can see the blue doing that oscillation, so that downtrend. And it's using, when it comes back up, it's using the purple as a resistance over time, which show two things over there, two stops right there. Those are what I call the continuation signal, because your entry basically got missed, right? It's like trying to enter in the middle of a run, in the middle of a move. And so those continuation signal there can be used to manage your position or get an entry if in case you missed the initial entry, right? So those are the continuation signal for me. Let me see if I can find another one. There you go. It's not exactly pixel perfect. So again, just to make sure that nothing is pixel perfect. Don't expect this kind of bounce on a 618 every single time. It can go a little bit over, can go a little bit under. Okay, it still is considered. You should still be considering that in your mind. A bounce on the 618. Okay, so exact same thing over there. Even though we broke that purple line, it's not pixel perfect, but it applies. And the reason why is this. I'm going to zoom in to make it clear. When you get to this specific candle over there, your blue on the next tick is going to be over your purple. So it doesn't show the pixel perfect bounce, but the idea behind it, the concept is exactly the same. So you get your picture perfect signal, right? And then you get your continuation signal over there. Let me highlight those a little bit better. Picture perfect entry. This is not what I want to do. And continuation signal. Okay. Now let's see if I can find another one to make it clear again. There you go. Over there. Picture perfect entry. Which is right there. Continuation signal. Right over there. Continuation signal. Right over there. Okay. Now, last but not least, the fib, what I call the fib signal. And the fib signal is this. It's basically using the two Fibonacci numbers, so 61.8 and 38.2 as signals. And you can see you get one over there, right? Comes back to the 38.2 because we went down, right? So we come back to the 38.2, even though it's a 618, since we are coming down, it's inverse, right? So we come back to the 38.2 and we bounce from it. Let's see if I can find another one, another clear one to give an example. There you go. Get a few over there. So you get one over there, blue coming to the 618. On top of that, it's using the purple as a resistance. Again, blue coming to the 618. On top of that is using it as a resistance. And again over there. And again over there. So that the thing with that fib signal here is that, again, like everything, you need to wait for confirmation. Just because it's coming up or coming down to that level does not mean it will not just fly through it. Okay. So best to wait for confirmation. So you have two obvious ones over there, of course. 618, 618 bounce. Okay. And that would match this price action and this price action over there. But again, and by the way, that was right after a perfect signal. And those are continuation signal. You see how you can put everything together basically at the end. So I'm gonna just highlight everything. So first, if I were to, I'm gonna take this entire zone here, okay? And this entire zone, actually, again, to prove a point that I was making earlier, is that this is not a trending market. This is a consolidation period after a huge move, right? You have your consolidation, move, consolidation, etc., etc., etc. And that's when the jewel is going to shine between those big move. Okay, so if I focus on, you know what, let's make it something like a little bit, yeah, thank you, and let's make it not right. So let's analyze these, all the signals of it that we can get, and now we can trade that on the day. So first off, you had the big move, and right over there, picture perfect short signal. Okay, let's continue, see what we got. You get a fib signal over there, right? The blue coming down to the 618 and bouncing from it. Then you get continuation signal. Then you get continuation signal. Then you get continuation signal. And you finally get your move, even though whatever the hell that was, wicks, Bitcoin for the win. And so that's all the signals you can get, right? And of course you get over there, you get picture perfect short signal, and in there you get fib signal, right? The bounce. So I mean, you can keep on going like this for quite a while, and you're gonna see, if you apply that you're gonna basically find signals pretty much everywhere. And now the thing is this, right? Just because you have a signal does not mean it's gonna work, number one. Two, you have to take it. Missing a signal is fine. If you don't have your risk management nailed down, no matter what signal you're going to take, no matter what tool you're going to be using, if you don't have your risk management in place, it's not going to work. Also, and that's rule number one, right? Risk management, no matter what tool or good you think the signal is. Rule number two, price action trumps everything. Price action takes over everything, and especially market cycles, trend, and consolidation period. If you don't know how to read the market cycle and the different periods into a market and the trends, if you don't know how to read that, please, you need to either take the TA program from Crown or even the TA 101 series that is free on YouTube. Those are like must have. And this is how I plan things in my head. Okay. Just because I have the Jeel giving me a signal is not enough. It's way not enough for me. And this is what I want to see. Okay. We're going to go to a very obvious one. Now that's the thing, right? It's hindsight, but not all signals are going to be that clear. I'm just using that one, of course, as an example to make things as clear as possible, to make sure as many people as possible understand me. But they are not always going to be that clear, the signals, right? Now the trends. So to explain exactly how it goes in my head and how I like to read things is like this. So we have a trend. Okay, come out of the consolidation, trend up, up. Okay, that is your trend over there. Let me make it a little bit clearer over there. That is your trend. Again, during those trends, up or down, Jeel is not going to show you a lot of things, right? But no matter what the Jeel would be showing to me right now, doesn't matter, because we are in a trend. And if I take a trade in a trend like this, it's going to be to the upside. So as an example, I would take this trade over there during that uptrend. Let me get rid of that. Get rid of this thing first. Okay, I would take that bounce on the 38.2. I would take that bounce on the 618 to the upside. I would not be waiting for a short signal. And the reason why is this. In my mind, trends make up for 50% of the trade. Trend and market cycle, market position that we're in. Trend make up for 50% of the success of my trade. In my mind, again, this is something that I use personally, just me. Doesn't mean that this is the thing that you have to use, doesn't mean that it's going to fit your style, okay? I'm just trying to, again, explain what I do personally. And I'm not saying that's the way to do it. Okay, to be clear. So, trend and market price action make up for 50% of the trade for me. What else makes some weight in my mind as to why would I take a trade? It would be, if I can find my things, resistance and support. Okay, that makes up for 15% of the success. I need to have that thing on my, let me add this percentage there. I need to have this on my side. And then finally, so when I say horizontal support and resistance, what I mean by that is price action patterns. So you have horizontal support and resistance. You have, let me see if I can find an example. You can have something like this, a channel. Okay. At the end of the day, all the patterns are exactly the same idea behind them, right? Which is actually that's actually a rising wedge. Well, anyway, let me see if I can find that. That's not a good example there. Let me see if I can find a good one. Yeah, okay. We don't have the volume to say that it is. Nope, never mind. My bad. Meh, not convinced. Maybe we have this. Yeah. Some kind of a channel over there going on. So let's say we have not seen anything that's on this side already. Okay, anything that's in there, we have not seen it. We are just happening right here, and we can already draw a channel over there, right? And so that would be the exact same thing as horizontal support and resistance to me. If we had, say, head and shoulder. If we have something like this, so head and shoulder, okay, that would be again the exact same thing. That's where I would place my 15% over there. So any price action pattern would end up in that 15% weight of me. And so horizontal support and resistance would be 15%. A pattern that is less used, so diagonals, would be maybe 10%. Head and shoulders might be 8-7%, something like that in my head. That's you need to find a good math and stats that work for you, right? And everything else is my edge, and my edge is the Jeel in my case. So everything else, so that would be 65%. If I get a signal on Jeel, I have either the picture perfect one, so that would make up for that would make up for the last 45%. Where's my thing? Okay, perfect. If I had a continuation signal, that would make up for 25%. And if I have a fib signal, that would make up for between 10 and 15% of success in my mind. So at the end, in the end, what I want to do is add everything so that I reach more than 70%. If I get more than 70%, I'm going to take the trade. But again, that's a rule that I'm using for me to remove emotions out of it, to remove any suspicion, doubt, fear, etc. I would like, I prefer doing it that way to remove all the unnecessary things or the things that work against you when you trade. And that's, again, my technique. My method doesn't mean it suits you, doesn't mean you actually need that. But the big point of that is this. Price action is 50%. If I don't have price action over there, I don't have anything. So the big point is this. No price action. If the price action does not agree with whatever your age or your oscillator is saying, or whatever patterns you are seeing, like an end and shoulder or whatever, if the trend and the cycle don't agree with you, with whatever it is that you're saying, I don't take the trade. I personally don't do it. I need to have more than 70% of mind success, so to speak, to take a trade. So I'm going to take that example right over there. Okay, this picture perfect signal right here. Okay, here is the thing. We have a trend up, and even though I have my background alerts, I have my perfect signal, perfect entry, I am not going to go short. If I were long from the past, I'm going to take profit, but I'm not going to enter on that perfect signal over there. Not for and just to be clear, not for a directional trade, not for a trade that I'm planning on holding for a long time. Okay, so if I took an entry on one of the signals prior to that, anywhere on that uptrend, I would take profit over there. So if I take a long entry here, or take a long entry on that bounce, so over there or over there, that point to me is where I take profit. Again, and the only reason why is if you look left, there is no point that it's blue sky, right? It's a blue sky breakout. There is no point that you can use to judge when to exit the trade, right? And so besides using candles and volumes, there's not a lot that you can do. So I personally prefer to do it that way, which is using the oscillators and using the Jeel to tell me, in case of a blue sky break, when exactly should I get out. And so that's the thing. I have my picture perfect signal on the daily, but price action does not agree. I don't have my 50%. If I don't have my 50%, I don't take the trade. Okay. Now, there's the idea though. Now the trend change, and you can see it right there, right? On the daily, you have lower low, lower high. So you have your trend change on the daily. Okay. And you had a picture perfect entry over there. Well, right over there, put a vertical line, is what you got. And that's the one I like to take for a big directional trade. Again, just to be clear. I have my trend change. So I have my 50% with me. Price action do agree with the signal that the Jeel is giving me. I have a continuation signal from a perfect signal, perfect entry. So I got my 15. So that was continuation, it's 25. I have my 25. And on top of that, I have two levels to manage my coupon and a level to get my profit. Let me just get rid of that thing over there to make it clear. Right? So let's just say I'm a little bit late. Going to over there on that candle there, okay? Because I'm a really patient and safe guy. I wait over there. In my mind, I have 75% of chance of success there. And I got actually more than that because I have my horizontal support and resistance, whatever. Again, whatever pattern your the price action is giving you. So you have the downtrend 50, horizontal support and resistance are on your side. You have a level to manage your risk upon, and you even have a level to take some profit, and even 25 over there. So that's that's 20, 40, 90. That's 90% chance of success. In my mind, I'm gonna take that trade. I'm gonna enter short in there, and I'm gonna use that level, right? The previous swing high as a resistance, as the risk management line, right? If we start closing over the 17k, I'm probably gonna get out. But that's my entry over there in between 15. On that candle over there, and we reach a previous level right there, and we actually break it. I would definitely take some profit over there. But there is the thing, right? And that's what I like about the Jeel. That's why I really enjoy doing directional trading with it. I don't get all the way. Okay, I do not get any signal telling me now is a good time to get out of your short. All I get is just continuation, downtrend. Okay, I did take some profit over there because I like to take profit on support and resistance. If I go short, I'm gonna take some profit on that support. So we broke that. I took some profit, but there is the thing right over here. I have a continuation signal. See it? Blue coming up, using yellow as a resistance and back down again. And since I have an entry that is based here, I took some profit there. So let's just say my average is now, if I enter here, my average would probably be sitting at around over there. So what does that mean? To make it clear is I can use that level over there as a risk management. Okay. So if I enter first entries here, take some profit over there. Sorry, my first entry was not that high. My first entry is somewhere around there. Then I take some profit on support. We break down. Okay, that's good. Comes back up and breaks down again. I can add, when I see that the Jeel right there is giving me a continuation signal over here, I can add to my position, to my actual short position, because when I exit, I didn't exit everything. That's one thing I do. I never, if I take big directional trade, I do not exit the position entirely until I get a very big signal telling me now it's time to get out. So I took some profit. Let's say I take 50%. I get the continuation and I get the continuation signal over there. I'm going to add to that position, which is probably going to give me an average of around that side. And this is exactly what I'm going to manage my risk upon, because it's a swing high, right? It's a trend, swing high, continuation signal. So that's where I'm going to manage my risk over there. You always preferably want to use previous swing high and previous swing low as risk management. But in order to refocus the thing on the Jeel, but that's the idea, right? It helps you manage your position depending upon your entry and what signals you're looking at. So if you didn't get an entry there, you got an entry over there, then you can take profit over there, and then when it comes back up, add again to your position. It comes back down, and whenever you judge it's a good time to take profit, then you go for it. And so that's a way to basically use perfect signal, continuation signals. And just as an aside, you can see you get Fibonacci and trend. So let's say you are not thinking that Bitcoin is going to reverse over there, even though it's starting a downtrend. You do not think that it's going to continue the trend. What you think is this, which was pretty much what every YouTube channel was thinking at the time, which is Bitcoin to 100K in about 2 months. So, and that's pretty much what everybody was thinking, right? It's just, but anyway, this is, if that's where your mindset, then again, you can use Jeel Blue Fib line to get an entry long, right? After that, it turned against you, but that's the rule of the game, name of the game. Nothing's perfect. So I think that covers it for the signals and how to best read them. Let me see if I can, if I manage to find anything. Yeah, so you get exactly the same idea over there, right? You get your perfect signal, and you get continuation signals all the way up until you reach the critical zone. So entry, continue, another picture perfect one, continuation signal, until you reach the critical zone. And this is an example where things, exactly why I say 50% is price action. 50% of the success is going to be the price action agreeing with your signal. Because yes, that is a picture perfect signal. You get a background alert, and then you get exactly what we're looking for. Picture perfect signal, right? Yes, you do get a drop, but look at the chart. Look at the chart. Move, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high. This is a complete uptrend that you're going through, right? And Yes, perfect signals, but price action does not agree. The market is not giving you that 50% success rate, win chance that you're waiting for. You are not in a downtrend. You do not want to take those reverse signals over there, even though they are perfect ones, because price action does not agree. So right off the bat, if you take those signals, you're going to remove that 50% chance of winning right away. Price action first trumps everything. Not only that, but if you, let's say you take that entry over there, right? Where do you manage your, if you take that perfect signal entry there, okay? Where do you manage your risk upon? You have to look, yeah, I guess that level over there. So you would have to enter at 5,500 because you don't have many previous swing, right? To manage your risk. So you want to enter short here. The only level you can use to manage your risk is going to be at 6,000. So that's quite the risk that you're taking. And not only that, but if you look at the level themselves, your first target would be the previous swing, right? Previous swing low. So yeah, it got hit. But if you look at, I'm pretty sure it's if the 1-1 risk reward. If we look at the risk reward over there, I keep missing, like I keep losing those things. It's a long short position. If we, where do you go? Look at that. Well, risk reward equal 1. So you're risking as much as you're risking as you're winning. So it's a pretty bad. Like you don't want to take this. Like again, if you want to have specific rules about that, I would refer to the learning programs of the technical analysis of background, where risk management and risk reward is a whole big 2 hours module. But again, price action comes first, and if you don't have the trend on your side, if you don't have the market on your side, and you're just trying to fight, because that's what it is, it's fighting the market, right? Yes, you get the signals, but at the end of the day, you're just trying to fight the market, right? Market wants it is in an uptrend, it wants to go up, and you're trying to fight it. And it's the exact same thing over there, right? Big uptrend. Yes, you get the signal, perfect signal over there. You get your downward move, yes. But again, if you take the entry there short, you are just trying to fight the market. What I would do instead, since we have a big uptrend, I want to be on the side of the market always, right? Since I have that big uptrend, I would take that 618 bounce, which is actually, that one is pixel perfect. And it's right there, right? I would go long on that instead of going short on that, right? I would take profit if I were long before, right? And I think that covers it for the signals. So just to recap, picture perfect signals, continuation signal, and Fibonacci signals, right? Yeah, I think that's pretty much it. So we're gonna we're gonna go deeper into into the more advanced technique as to manage entry and exit position in a later video. So that video was really just to give an overview of the big three. So what I call the big three is the curves, basically the curves with the background, blue, purple, and yellow. And since this is the core, this is the main component of the Jeel. Everything else is accessory to it, right? So I think, yeah, that covers it. I'm gonna close that video and see you in the next one.